I'm John Marino, Senior Editor with The Deal, and I'm joined today by Ed Dartley. He's the securities lawyer with Pepper Hamilton, and one of the things that I would like to get into to start off has been the deal scene for private equity. There's less deals, but there's more cash being spent, and that says a lot, I guess, about how private equity firms are valuing the companies that they're buying, right?
That's correct. I think that over the last couple of years, the deal flow for private equity in general has increased as private equity firms are becoming more and more popular and raising bigger and bigger funds. What happened this year in the first quarter is you're seeing more dollars in private equity chasing fewer deals. There's a lot of capital to deploy, but not as many good deals out there. And what you're seeing as a result is valuations going up to the higher range of what those companies are worth.
Right, and we're seeing multiples increase across a number of sectors. It isn't just, say organic food or pets. It seems like there are a lot of places where a lot more money is getting put to use and multiples are getting driven up. And at the same time, private equity is now sitting on an all-time cash glut. What kind of a scenario does that create going forward?
Well, it's interesting because you're going to see increased chasing of companies that, of course, the private equity firms are hoping are quality companies. At the same time, there are fewer and fewer of those companies out there.
Right.
So you're going to see a continued rise in valuation, and at some point what will happen is that will push down and impact private equity firms that have more of a distress strategy, because as private equity firms with a distress strategy are looking for deals, there's fewer and fewer of them out there.
Right, and just one last one before we wrap up here. Public markets are white hot right now. A lot of PE firms are trying to still IPO companies that they've had in their portfolios on top of the stuff that's already come to market so far. What does it say, I guess, about how private equity views how stock buyers are consuming their offerings right now?
I think that the private equity market sees a willing audience in the stock market right now, and what we're going to see is, as the year goes on, I think you will see more private equity firms bringing their companies to market through IPOs.
All right, it's going to be very interesting to watch in the second half of this year. Ed, thanks for joining us.
Thank you.